Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to my video today. And as usual, please don't forget to like my video and subscribe to my channel. That will be really awesome. I really appreciate each and every one of you. So in today's video, I'm going to be talking about what happened in the markets last week. Also explaining a little bit more about our strategy overall and some key things that are going on in the market at the moment. So I will get started. So our portfolio performed really well last week. Again, it's been a good start to the year so far. And last week, our portfolio performed at a profit of 3.88% from the previous week, which I was really pleased with. And that was mainly because the S&P last week and the Nasdaq rallied. We also saw Europe and China performed strongly as well as crypto performed reasonably well last week, with Bitcoin around about flat, but there were many altcoins in our portfolio that rallied and caused some good upside for our portfolio. We've also seen oil surge very recently after the Opec meeting, in which they decided to reduce production quotas, which sent oil prices surging. As well as I also did lots of short-term positions last week in natural gas. I did a number of those which were profitable. I also did a trade in Arbitrum, which is a new Ethereum scaling solution, layer 2. And that was at a profit of about 10%. And I also did a short position in MTW, which were all closed in profit and which helped our portfolio outperform last week. If we look at how our portfolio compared to its benchmarks, the Nasdaq was up about 3.4%, which we outperformed, as well as the S&P, which was up slightly more at about 3.5%, but we also outperformed that as well. As I said, European indices did quite well as well, and the FTSE 100 in the UK was up just over 3%, and Bitcoin was down just 1.65%. For the week. So it was very close to flat. If we look at our portfolio from 2023 perspective, our portfolio is performing extremely well. We're beating all of our benchmarks. So our portfolio is up 19.39%. If we compare that to the Nasdaq's up about 16.8%. The S&P is up 7%. The FTSE is up 2.42%, and the Hang Seng Index is up about 2.52%, and Bitcoin is up a whopping 66.75%. The reason why I benchmark against those different indices is because I have a proportion of some of our stocks or our assets in many of those different markets. So it's not like a oranges for oranges type of comparison. But I like to benchmark against all of those indices because we have either stocks or assets from that particular allocation. So all in all, we're doing really well so far in 2023. I'm really glad that a lot of you stayed patient to our portfolio after what was a tough 2022. But we are coming out of the other side and we are doing extremely well on a year-to-date basis, and actually our portfolio has performed extremely well since its inception, and I'm really pleased with the portfolio performance. So thank you for staying patient. If we look at the main news for last week, as I mentioned, it was a strong week for the Nasdaq and the S&P 500. With value stocks slightly outperforming the growth stocks, but it was very close. So it was a good, strong week. We've also seen bank stocks appear to have started to stabilize, and they did rally moderately. That's after the last kind of month of declines after this kind of mini bank crisis. I think that people are a lot more confident now that the US government are going to support banks and makes it much less likely for a run on banks. Also, last Thursday, there was a newly released set of proposed regulations for mid-sized banks. They were previously in place for some of the larger banks, but the regulations were different for some of the small, mid-sized banks. And now they kind of they're trying to bring those into line with some of the larger banks to help make sure that they impose more stringent capital and liquidity requirements on those small banks, and they're required to pass more stringent stress tests. So I think that's pretty good, and that was seen positively in the stock market, especially for those regional banks. And we've seen the regional bank index actually perform very well last week, ETF. Also, very recently, it was announced that the OPEC Council, and that is a council of oil-producing nations from around the world, mainly headed up by Saudi Arabia and some other large oil-producing nations, and they have decided to produce less oil. So there's been cuts in their oil production, and there's been particular cuts from Saudi Arabia. And that means that we're quite likely to see some more pressure, I think, on inflation in the future, as there is less oil production. That means that the prices of oil are likely to rise over the next couple of months. We all know that energy was a big factor in inflation, and it means to me that I think we might see more sticky inflation for longer. We also saw the market receive some positive news on inflation, and that's with the US core personal consumption, which is known as the PCE price index, for February, and that came in at 4.6% versus consensus for 4.7%. So you're still seeing good positive signs of inflation, but that does exclude food and energy. And as I said, I am expecting oil prices and potentially natural gas prices to increase over the next couple of months. We also saw the US Commerce Department, and that's released its final estimate of fourth quarter 2022 gross domestic product growth, and this was revised slightly lower to 2.6%. From a Europe perspective, the Eurozone annual consumer price growth in the Euro area slowed to 6.9% in March, and that is from 8.5% in February. So that's another key piece of data that was released last week, as well as revised official data revealed that the UK avoided a recession last year, and that was mainly helped by the government subsidies that were put in place to help people with energy costs and energy bills in their home. And what it's saying is basically without that, it would have been quite likely that the UK would have already dipped into recession last year. We also seen house prices in the UK in March fell at the fastest annual rate since the great financial crisis, with the Bank of England showed a big drop in net mortgage lending in February. So basically what's happened, as those interest rates have continued to increase, there's been less demand for housing in the UK, people taking out new mortgages and buying new houses. And that is because they don't want to pay those higher rates. And that is now starting to have an effect on the house prices in the UK. And they're starting to drop at an ever-growing speed. We've also seen the IMF projected that China's economy would grow 5.2% this year, while growth would slow to below 3%. Last year's China's GDP grew 3%, and that was one of its lowest on record. So basically, we all know what happened last year in China. There was lots of lockdowns around the country, and there was very stringent COVID-19 regulations in place, many lockdowns, and this caused growth obviously to much lower in China. However, the IMF and many other people in the world are expecting the Chinese economy now to grow at a faster rate, obviously, than it did last year, as the economy starts to open up, and this would really help overall the global macro picture, because China does make up a lot of demand of goods and services around the world. We also saw some big news from 𝗂𝗶𝗱𝗲𝗃 Group, which is one of the stocks in our portfolio. And that rallied very hard last week. And that was mainly because it was announced that they plan to break the business up into 6 different business units that can independently raise capital or seek initial public offerings. This has been seen as very good for a number of reasons. One of those is that those can be spun off, they can be independent, they can have different business heads, etc. And they can really drive growth in their specific sectors as you concentrate on more of those business units rather than the overall global company. The second thing, which is obviously very positive as well, is last year there was many discussions in China, and there was many regulatory clampdowns on large companies such as 𝗂𝗶𝗱𝗲𝗃, as they felt they had kind of anti-competitive advantages over some of the smaller companies in China. And I think this will cause a lot less pressure if they're forced to be kind of broken up into lots of smaller businesses. And I think that this means that it's much less likely in the future that 𝗂𝗶𝗱𝗲𝗃 will fall under regulatory threat. So I think that's very good for the stock moving forward. And I'm very positive about 𝗂𝗶𝗱𝗲𝗃's future moving forward. So on to our top 3 performing stocks of last week. And our top performing stock of last week, not surprisingly, is 𝗂𝗂𝗶𝗱. And as I just mentioned, 𝗂𝗂𝗶𝗱, they plan to split into 6 different business units. And this was seen very positively by the market, and it was up a whopping 17.58%. The second best performing stock, actually for 2 weeks in a row, is the 𝘃𝗶𝗃𝗃𝗀𝗃 Group. And that was up 17.29%. And Sinclair Broadcasting Group was a company that I recently put into our portfolio about a month ago now, and it has performed really well for us so far. And the third best performing stock for us is 𝗃𝗏, and that was up about 14.38%. And that was obviously because of a lot of the good data that came in about the reopening of China and potential growth forecasts, etc. And so that was up 14.38%. So all in all, a good week for some of our top performing stocks. As we move on now to our Death by Charts edition, I'm going to be run through a variety of really quality charts. The chart that I wanted to bring up to the left-hand side is the US PCE price index year-on-year change. And that is, we have seen more evidence of a decline in the US inflation rate. The PCE price index moved down to 5%, which is its lowest level since September 2001. And the peak was 7% in June 2022. So good progress has been made there. The second chart that I wanted to show you to the right is the S&P GSCI commodity index, which measures lots of different commodities. And really what I wanted to show you there is the S&P GSCI commodity index is down 37% from its peak in March. And at its lowest level since December 2021. The year-on-year decline of 25% is the largest since May 2020, likely to lead to a much lower March CPI print. So this really does show, obviously, energy is a large part and commodities is a large part of the inflation reading. And as those prices have gone down and dipped 37% from March, the March peak, this is showing that it is likely in the next CPI print that it could be a lot lower. They could show good progress on inflation. Third chart that I want to show you is a smaller number of stocks are outperforming the S&P 500. So what basically this chart shows is that only 8 stocks in the S&P 500 are making up the majority of the positive gains in the S&P 500. As we know, the S&P 500 is made up of 500 stocks. So that means that 492 stocks are collectively down on the year, within the S&P 500, but those 8 stocks are making sure that it is outperforming because they are weighted very heavily, especially in some of those large technology related companies. The fourth chart that I wanted to show you was deposits change from a week earlier. And really what I wanted to show you here is we all know that banks have struggled over the last couple of months, especially the smaller banks, which are known as regional banks in the US. And what we are really seeing is we are starting to see many people are withdrawing their money from some of the small regional banks, which they're worried about the kind of liquidity and those run on the banks. And they're moving them over to the larger banks. So some of this, what's happening really is benefiting some of these larger banks, especially in the long run as they take on more and more of customers' deposits, which I don't think is really that great from the US. And I think by the US government kind of rescuing some of these regional banks and asking some of these large banks to kind of bail out some of the smaller regional banks, is they are basically transferring a lot of the power over to these kind of large banks and giving them a larger competitive advantage. So the 25 biggest US banks have gained $120 billion in deposits in the days after the Silicon Valley Bank collapsed. All the banks below that level lost 108 billion over the same period. So you can see a lot of that transfers from some of the small banks to the larger banks. So I wanted to move over to the crypto news and views now. As usual, I'm going to be focusing on just 3 areas. Crypto, again, has performed extremely well in 2023. Really happy with the way it's been going. As we know that many people have, put a portion of their funds in Bitcoin because there were a lot of worries about the banks, especially those regional banks, that there could be a run on the banks, and it caused people to move towards Bitcoin as a life raft, as a store of value. So we've seen a lot of people and institutions bought more Bitcoin. And again, there was another large buy from MicroStrategy. As you all know, in 2020, 2021, MicroStrategy has put a lot of Bitcoin on their balance sheet, and they have continued to kind of double down. They've continued to increase their stack in Bitcoin over the last couple of years, and now is no different. And they have increased the Bitcoin holdings again by another $150 million over the last kind of week to 10 days. And this really just shows a lot of their conviction in Bitcoin as a store of value. And they've managed to kind of average down on the holding price, which should be very good for MicroStrategy in the long run. Second piece of news that I wanted to bring you is another, obviously a nation in El Salvador. In 2020, they moved on to Bitcoin as the form of exchange. So people in the country were able to buy and use Bitcoin to purchase everyday goods in El Salvador. And they have continued through their leader, Bukele, who has constantly been an advocate for Bitcoin, and really technology has been his main kind of focus of his presidential term. And what he's done now is he has encouraged businesses to move to El Salvador, encouraged innovation by cutting both company corporation tax and income tax for those working in the technology sector and those working in kind of innovation types of businesses. So this is really an experiment for El Salvador about how they can really become a future technology hub, especially focusing on blockchain and Bitcoin in particular. Third piece of news I wanted to bring to you was Arbitrum. Arbitrum did release an airdrop about a week to 10 days ago, and just as was expected, the price did dump. And that always happens when there is an airdrop, because a lot of people have been either airdrop farming or have been using the network in order to be able to get that, specifically get that airdrop, and then they try to sell that off as quickly as they can before the price goes down in order to realize a profit. But then what you see after that is you generally see seller exhaustion, and that is when there's usually a bit more of a rally, which happened towards the end of last week, and I managed to get out of that trade at a 10% profit. It's since then dipped, but there was basically the Arbitrum token is being used as part of a DAO, and that allows people to be able to vote on certain things that the Arbitrum Foundation are able to do. So what happened is there was a vote on the Arbitrum network about some of the funds that they could allocate to the Arbitrum Foundation, and they could start to spend for operating costs, etc. However, it was noticed that they had already started to spend those funds before the vote had been completely finished. And that led to a lot of outrage, and that caused another Arbitrum sell-off this week. Is later been clarified by Arbitrum that the vote was more for ratification purposes rather than an outright vote. However, it is very clear that this type of behavior did put a lot of people off holding the Arbitrum token. However, I do think that it is a short-term issue, and I am expecting Arbitrum to do very well in the long term, especially as people focus on these Ethereum scaling solutions. And I think Arbitrum is going to be one of those leading scaling solutions, which should drive demand to the token overall. Last chart that I just wanted to bring up in terms of a Bitcoin chart is the cost basis analysis. And I always think that this is very interesting because what you have is you have these kind of short-term holders realized price, and that is people over the kind of last couple of months where they have bought their Bitcoin. And this kind of runs into a lot of kind of short-term and medium-term traders. And what you tend to see is the short-term realized price, and when that crosses over with the long-term realized price, it's seen as a very kind of bullish crossover. And historically, this has marked the confirmation of the start of the multi-year Bitcoin bull runs. And this kind of leads to lot less sell-offs, as we know that not a lot of Bitcoin has actually moved over the last 2 years as well. And this also helps if there's not a huge amount of Bitcoin that's able to be traded on exchanges, that can cause the price to go up as well. And we also know that in less than a year's time, we also have the Bitcoin halving, where miners are going to get less block rewards, and that is going to lead to less selling pressure of Bitcoin, etc., and less of a supply, and we're going to see a supply shock. So I'm very positive at the moment and things are happening in Bitcoin, and I see it very similar to what happened in 2019 after we bounced off that low. The price started to stabilize, and we saw some good gains. So although I don't expect us to hit all-time highs in 2023, I do think that it will be a very positive year moving forward for Bitcoin. All right, guys, so that's it for this week. As usual, I would like you to join my Discord group. If you haven't already, come and chat with us. We have a really awesome, amazing group of people regularly having chats. You can ask me any questions at any time. I'm totally open. I'm approachable for you all. And yeah, come and join our Discord group. The invitation should be there somewhere below. So thank you very much, and I wish you a great week ahead, and welcome to all my new copiers, and thank you to all my loyal copiers who have been with me for several years. So until then, have a great week ahead.